I'd like to make you aware that I wrote a new Substack in late September 2024 on the national debt explosion. And of course, it's mainly about the US national debt and the implications. And I noted that we had reached 35 trillion US dollars, a new world record in world history in real terms of the absolute size of national debt, but also the fact that the interest payments on this debt had now become so large, it's now exceeding the entire military budget, the military industrial complex spending, which of course is much larger than many other countries, including Russia and China and European countries together. The US military spending is much higher, but the interest on the national debt is now higher than that. So it's quite astonishing. And it's very clear that national debt has been growing exponentially in such a, we're in this phase that the time period it's taking to have another trillion, and that's a big number, of $1 trillion of national debt. It used to be decades, but more recently it's become years. And actually this year it's become months. To have another 1 trillion in national debt. And when I wrote this in late September, I was warning, well, it was 35 trillion, but if you just read this a few weeks later, it could well be 36 trillion. Well, we're already rounded at 36 trillion now, just a few weeks later. It is quite astonishing and really scary what's going on. What are the implications? Well, some people say, oh, this is not to worry because the US can always print dollars. The debt is in its own currency. Unlike the rest of the world, developing countries in particular, they're borrowing in foreign currency. And when you borrow in foreign currency, then you're quickly in a debt trap because the problem often for developing countries is that their own currency weakens. Therefore, in domestic currency terms, the debt, external debt, gets larger, and you basically can't get out of the debt, and then the interest payments, interest on interest as well, become so large that you can't get out. Now, the US has this exorbitant privilege, as European leaders, particularly French leaders, quite critically called it already in the late 60s, just before they essentially forced the end of the Bretton Woods US dollar link to gold. And essentially in August 1971, the US had to default on its international obligations, which were, if a foreign central bank asked for all the dollars that they'd created to be exchanged into gold, yes, we will exchange the gold at the fixed exchange rate, which was not very high, a fraction of what it is today. And so the French demanded, because the French were the only ones that could speak up because they were not part of NATO and had no US troops in the country. So they were saying, you guys are just printing dollars and buying up Europe and the world. Okay, so those dollars we're going to change into gold now. And they kept doing that until in August 1971, the US pulled the plug. I have a Substack on that with more details, looking at the Middle East, the oil, the petrodollars, the petrodollar piece this year. Have a look. So after that, the dollar fell, and that's when the US came up with the idea to back it by something that, because fundamentally the trouble was that the US had this huge trade deficit, and Germany and Japan had huge trade surpluses, and Germany and Japan couldn't find enough in America to buy. Well, what they needed was oil, energy. So the US essentially more or less incorporated Saudi Arabia into its economy, if you want. Protecting it, and protection racket, US troops in Saudi Arabia, keeping the regime in place, but in exchange for Saudi Arabia only selling oil against the US dollar, and also at the same time the obligation to have 80% of the revenues from oil reinvested in US treasuries. And that's always been the weak part of this. So while the US can print dollars to service and repay their debt, yes, but what will the dollars be worth? What is going to be the value of the dollar? And of course, this exorbitant privilege has always meant that the dollar, it works while the dollar has value. Once the dollar loses its value, if the dollar collapses, then that's the end of that privilege as well. Now, with the petrodollar, the US managed to hold on to that and therefore preserve the privilege because it was now an energy cartel that the US was in charge of. And any country that wanted to break out of this, whether it was Saddam Hussein in Iraq trying to sell oil against the euro, they would come down harshly on them, or whether it was Libya with Gaddafi also trying to not sell oil against dollars but against other things, including gold, they would come down on them. But we are in the end phase, and of course it's clear with the BRICS countries rising, Brazil, Russia, India, China, South Africa, but many joining, and many, the list of countries that want to join is extraordinary. We now have basically the majority of countries in the world beginning to unite and form a trade bloc against what has increasingly become a minority, which is the US empire group of countries, the US and its vassal states, US Five Eyes, Canada, Britain, New Zealand, Australia. And then you have the EU, which is very much under US control. I wrote about this in one of my Substacks, the Deep State Substack, how the CIA created the EU. It's still very much under US control. And then, of course, we have other vassal states in the Far East, Korea, Japan. So, but overall in the world, that's a minority. So increasingly, we have this scenario where other countries don't want to be beholden to the dollar, don't even want to use the dollar. Why? Well, this is where the US shot itself in the foot by imposing these very harsh sanctions on Russia, particularly freezing or taking its $300 billion of foreign exchange reserves. The world watched this and was appalled because every government, every leader, every statesman in other countries was saying, well, hang on, if something we do is not popular in the US and Washington, our foreign exchange reserves could be frozen. And of course, that could be devastating for developing countries because they may not have many foreign exchange reserves. And Venezuela, an oil exporter, an oil producer, a country that had never invaded any other country, as far as I'm aware, and certainly has not been accused of military expansionism, well, their foreign exchange reserves were also frozen, and so on. So the list is quite long. So a lot of countries, BRICS countries in particular, are now not wanting to use the US dollar. And so that is going to be a challenge for the US. Who's going to buy those US treasuries? China has already reduced its investments in US treasuries. It used to be, Japan and Germany with the huge trade surpluses buying US treasuries, and Saudi Arabia recycling, also one of the biggest US treasury purchases, Saudi Arabia. All that is of course partly history because Germany and Japan don't have big trade surpluses anymore. Now there's China, and China used initially to do the same thing, buy US treasuries. But essentially at one point China said, well, we want some representation in these international institutions, the IMF, the World Bank, and I've got a video on that and their response, because when they were turned down to have a bit of a bigger voting, it's US dominated, these are Washington institutions, IMF, World Bank, US dominated, then China said, okay, then we have to set up our own, and they set up their own new development bank and their Asian Infrastructure Investment Bank in Beijing and Shanghai as alternatives, and developed this Belt and Road Initiative and the Shanghai Cooperation Organization and the BRICS countries, which is all these alternative mechanisms. And so China has essentially invested its dollar reserves in other assets abroad, not in the US, not in the US dollar, for quite a few years, certainly for the last decade. And that's increasingly felt. The clock is ticking. Now, in the short term, you don't notice this. You look at the FX rate and the dollar looks reasonably strong. In fact, against the yen, it's been astonishingly strong. It is quite astonishing how much the yen has been debauched. What is that about? Well, I've got several pieces in the Substack again on that, but this is very artificial. So the real story is that in this late stage, with this national debt explosion, the debt rising exponentially in the US, we are heading, this is end game sort of stage. We're heading to some kind of, crisis or alternative exit strategies. I'll come to that. But it also means that, in this late stage, essentially, the US is pulling all the stops out, and that means the allies, the vassal states in the US sphere of influence, particularly Germany, Japan, have to pay for this. So their economies are being cannibalized, they're being demolished. We're witnessing the essentially intentional dismantling of what used to be strong and successful economies in Europe, particularly Germany and in Japan. We've seen it for 20 years. While at the same time, the central banks in these countries are taking policies that will bolster the dollar. Why is the yen so weak? Well, this is to make the dollar strong. So the dollar has stayed strong at the expense of Japan in particular and European countries and their artificially weak currencies to give this sort of illusion of some kind of remaining dollar strength. But you see in the gold price, and I've got a piece on Substack on the gold price and the gold market, that's going to continue. I've been very bullish and I've been recommending my readers to go into gold. I think this is still early stages because, of course, that's also a market that's been very manipulated to keep, to keep the lid on this and not make it so obvious. So the gold price has been artificially low and it's still somewhat suppressed. It's just early stages. I think it's going to rise much more. But overall, so we're heading in this unsustainable end game. And often in the past, the solution has involved war. Central banks have been created to fund war, whether it was the Federal Reserve just in time for the First World War, funding Britain and the US side, or whether it's the even older Bank of England and its official purpose of being created to help the war effort. There is this direct link, and also national debt has been spiraling to new heights, usually connected to wars. But also wartime periods give decision makers the opportunity to hide many things, and the war is the excuse why bad things can suddenly happen, and a kind of reset can take place under the guise of war. So I'm quite concerned about that, also with the US election and the various forms of interference we've had and attempts to keep President Trump out because he's just not keen on war, and he makes that clear. That's probably why he's not popular with the deep state. Whereas other players in the Middle East seem to be quite eager to expand war and expand military action that could escalate quite dramatically into a third world war. And likewise with Russia, although Russia, as you've seen, has essentially really given a last warning and said that no, if you give long-range rockets to Ukraine, whether it's UK or the US, we will respond and we will go nuclear, and you guys are going to be war parties in the US and the UK. And so for the moment, it looks like they've said, okay, hold on, but maybe it's going to happen through the Middle East. We'll see how this pans out. But so that's a concern, that as the national debt spirals out of control, and at the moment there's no sign that this is stopping or slowing, well, the danger is that essentially the crisis as solution is seen by more and more decision makers. And so watch this space, read up more on the Substack, and thanks for watching. Thank you.